evening, ladies and gentlemen. Today is the 18th of March, and this was the expiry day. And it was a very interesting day, to say the least. We came out of great positive cues after J. Powell announced that they're going to continue to remain dovish and they're going to search for inflation. We opened today with all markets, Asian markets, being up between 1 to 1.5%. Overall, the sentiment was on point for it to be a bull day, or at least not have too much downside. That being said, we gapped up, we made a high of 14,850, and from there, slowly but surely started crashing, breaking every support level. Today, if you were trading a strangle on the expiry, it would have been very important to break your trade and get out at the right point and not get burned too much by it. It was a little frustrating to manage. There have been worse expiries, but today's expiry was definitely difficult. That being said, managed to do really well and return something like 8% on the capital employed. And at the same time, a day like this, after this, you probably need to go back and look at what happened and what could have been done differently in the trade. It's a great day to study as such. So I hope you have a good time watching this video and have some good takeaways from it. I will be trading tomorrow, so I will catch you then. Have a great evening. Thank you for watching.
Good morning, ladies and gentlemen. So we have entered our position for the day. The 9:28. What we have done is, first of all, for context, last night, great news from the Fed. Very dovish sentiment. They want inflation, so market is happy with that. And all markets are up. US markets were up. Right now, US futures are up, so effectively up more than 1%. All Asian markets are up between 1 to 1.5%. And we have gapped up slightly under what the expectation was. But today being an expiry, global sentiment can go out the window as well. So that being the case, we entered, we're getting pretty good premiums, 14,800, 14,900 strangle. And we entered it for about 66 or so. And the idea now is that the downside will probably not be tested too much. What is contributing to the downside is obviously IT going down because the dollar has weakened. So weakened dollar, IT sliding down. Reliance has gapped up above this 2050 where it was taking support. And now is holding higher. So this might continue to move higher. Bank Nifty as well has opened around 34,600. So the trade plan for today is we're not expecting too much downside, and our downside break even on this position would be about 14,730, and 14,700 being yesterday's low seems like an unlikely possibility. At the same time, we've sold the 14,900 call, and even though right now the call is trading cheaper, this is the side we actually have some amount of fear on, because in case there is some kind of big short covering move, these calls will explode. So that being the case, we're going to ride out the day and keep balancing our risk as we do. Right now, the options positions will not be readable. We will have to wait till about 9:45, 10 o'clock to get some kind of clarity on what kind of positions are being built up. So until some of the data becomes a little more clear, I'll just go over what's the plan for today. If we start breaking down below 14,800, we will move these puts away. And if we start breaking out above 14,900, so as soon as the strike is touched, more or less, we're going to move away and risk off on that side. That is going to be the plan. And apart from that, I think our break evens on this position are, as it is itself, really good. So 14,970 and 14,730 is a very good range to work with. And yeah, good pricing of options this week compared to next week. But the fact that they're being priced like that means that there's potentially also big moves that can take place. Market is anticipating. Okay, so the time is 9:48, and so far we've been holding the range, and the pricing of options is coming down quite a bit. The early morning spike. What we have done is this triangle is trading at something like 55, just for in case the rapid moves. We have our SLM orders open at 56. So of course, the one thing about SLM is most of the time my idea is to not let the stop loss hit. It's not a stop loss. It's a drawdown protection. I will move the calls or I will move the puts to adjust the put side if it's taking a hit. These are in case suddenly bam, there's 50 points in 2 seconds, 2 50-point candles, and we are taking out 100 points and these expand. To protect against that, that's why we have this SLM. Okay, so our position remains the same. There's about 54 points left in it. We're taking a look at what is happening on the OI front. So one thing that's evident now is a lot of short straddles being built up at 14,850 for about 100 points of credit. So that gives us 14,750 on the downside, which is above our lower break even, and obviously 14,950 on the upside, which is below our break even. We are doing strangles instead of straddles because we're expecting a lot of volatility in the market, and it'll be easier to adjust from a strangle position than a straddle position. 15,000 as of now looks like the ceiling. So 15,000 looks like the absolute ceiling, and we're seeing a lot of the higher calls being moved down to 15,000. On the bottom side, there's no lower ceiling that is very evidently available, but there is 14,800 put has seen immense writing, and there is good amount of support at 14,800 and 14,700 put as well. So one way of looking at it, yesterday's sentiment was really bad. There was a lot of fear about the Fed, and at that point, the low that we made was 14,700. Now with that not really being a concern and sentiment being positive across the board, 14,700 we can consider the downside ceiling more or less. Okay, so those two things being the case, we are going to continue to follow the market today. We're taking a look at what's happening. After the gap up, Reliance now seeing selling, but I think 2000, yesterday's close of Reliance 2050-ish should act as a good support. Bank Nifty is now building up positions around 34,500. So let's take a look at Bank Nifty. Yeah, so positions being built up around 34,500 and more put side action. So you're seeing people more comfortably writing the 34,500, 30, and all strikes below that relative to the calls being sold. So Bank Nifty looking quite strong, should at least hold on to these levels. IT obviously after the gap up got sold into $1 this week, but has found some kind of stability at this point of time. So no momentum as such to keep an eye out for. We see mid caps are up 2%, small caps are up, broader market is doing well. All sectors more or less are up except for pharma and IT. So except for pharma and IT, everything else is up. And India VIX, which is fear over the longer term, right? So India VIX is down by 4%. So later dated options are becoming really cheap. And that shows you that the downside that is on the cards for today, at least the market is estimating, is not very high. So we continue to hold our position. Our intention will be, if we start testing 14,800 on the downside and we have reason enough to believe that there'll be downside momentum, we will move our puts from 14,800 to 1470. First, we will move half of them and then we will move the rest of them. Okay, so one more thing in terms of seeing how options pricing can give you sentiment. So right now we're seeing a dip, right? And a very small dip. And in that dip, the put actually is not going up at all, whereas the call is coming down immensely, which tells you that as there's dipping, the amount of people who are selling the 14,800 put is allowing the put not to go up in price. If people are buying puts into the down move, the puts, and there's an urgency with the buyers, the price should go up and sellers should start asking more. But since the perceived risk reward isn't going up that much, there are more sellers coming in, and that's what's keeping the put stable. So that's why we are going to stick to our criteria, very plain and simple, and until these are expanded and we move to 14,800, we will not adjust. These calls are anyway compensating for that. The calls going down immensely in price shows that people are very easily willing to sell calls, the 14,900 call in this case. So for now, we're quite comfortable. We don't mind if this put expands to something like 40, 45. As long as we stay above 14,800, we're quite comfortable, because finally the drag for today mainly looks like is coming from IT. And while there might be some negative sentiment, especially considering IT has been strong in the past 3 days, I don't think IT alone should be able to bring us down too much. And yeah, the thing is, Bank Nifty might also have an additional 200 points of downside. But if that plays out and Reliance stays stable, then we should be looking at a 14,800 sort of expiry. Currently, from the OI as well, there are visibly 3 potential expiry spots that make sense at this point of time. You see this immense put writing at 14,800. 14,800, 14,850, 14,900 are the highest likelihood in terms of expiry, and 14,800 would definitely be the bias, because Bank Nifty has to come down 200 points to expire at 34,500. IT is looking not so strong. Reliance is looking flattish. So that being the case, 14,800 expiry seems to be of a very high likelihood. We will eventually roll down our calls or roll up our puts to have a smaller range of 50-point range on our strangle, but we're not doing that as of yet. So we continue to slide down. These puts really are not expanding as much as one would think. So it just shows you that the market believes that this dip is not going to cascade further. These calls are really coming down in price. So that's another thing. We will wait for 14,800 to be tested. We'll move away half the position. And then if we see a slide from there, we'll move the rest. Okay, time is 10:15, and what we've done is to slightly cover the puts as we start testing 14,800. We have moved down 1/3 of our calls to 14,850. And the reason we're doing this is the puts are not really expanding in prices. The puts were really expanding in prices, then the lower put also, this 14,750, would expand to something like 24-25. Then it makes sense to square this off and roll it down. But the puts are not really expanding, so not getting great value on rolling down the put. So instead we have rolled down half our calls. And what we'll do is we'll roll the other half of our calls down if we move below 14,800. And we really start cascading, then once the puts expand, we will move our puts down as well. So that is the plan for now. So some interesting stuff happening. IT mainly looking weak. Bank Nifty is all right, and Reliance also kind of looking weak. Like it's not taking off from the gap up. It's been slowly trending downwards the entire time. So that being the case, this is what we've had to do to manage. So we'll keep you posted. We break down now. Here we're going to roll down the rest of these calls. Okay, so one green candle from 14,800, and we use that as an opportunity to move down the rest of our calls. Currently, excluding our current mark to market, this strangle has about little more than 65 points, 67 points, and that means excluding our mark to market, we have 67 points on the downside from 14,800 that we're working with. Reliance is looking weak. Bank Nifty seeing positions built up around all across 34,500, 34,600, 34,700. It's quite difficult to read Bank Nifty's data at this point of time. 14,800 was where we had conviction for Nifty to expire at most likely. So at this point, two things can happen. One, we have a slide from here because there was very high amount of put writing at 14,800 in the morning. So a lot of that gets unwound, then these puts will really expand. But at the same time, we have 27 points of credit from the call side, which should cover quite a bit. The next step will be to, depending on what the situation is and what the nature of the slide from 14,800 is, if we slide from here, either to roll down the calls or roll away the puts or do both. So if the slide conviction is very high, we will be doing both. We will both roll down the calls and roll away the puts. Okay, now we are heading below 14,800. What we've done is 2/3 of the put side position we have squared off, and 1/3 we have kept at the money. It's actually in the money, and our calls are at 14,850. We're not bringing these down, and we have rolled away about 19,800 quantity to 14,750. So the idea here will be, if we pull back, then we won't be exposed too much to these calls really expanding. That becomes a fear now. Big pullback from 14,800. If this is a bottom, we've just dipped a little below and we make a big up move, these calls will expand, which is why we continue to retain 1/3 of our puts in the money. So overall, still very good premiums available relative to the kind of moves that we're seeing. If we make another 20-30 point down move from here, then we will square off these in the money puts and move them to 14,750. Okay, so for whatever reason, the slide continues, and we're seeing dips both in Bank Nifty to pull it to 34,500, and now Bank Nifty is at 34,500, and IT to pull it to that support that we marked out. So, and Reliance as well as at 2,050. So from here, we're not expecting too much downside, which is why we don't mind. We're not moving down our calls, mainly because everything is at a stiff support, right? So Reliance 2,050, Bank Nifty 34,500, IT. So we're not expecting some slide, especially when like sentiment is positive. So we are more afraid of the calls than the puts. We continue to remain more afraid of the calls than the puts. We rolled down the rest of the puts because we were getting a good price. We were getting around 25 for the 14,750 and we've entered that. So we exited these at about 44, 45, something like that. Yeah, 42, 43, 44, and the last one at 47, the 1/3 at 47. So that's a good enough price. And yeah, because we're sliding, puts are expanding. But based on the OI data and based on what's happening with price action, we're thinking 14,800 should be in some form defended. We'll just also take a look at the OI. Right, so the 14,900 call building a lot of steam. 15,000 call definitely the ceiling. 14,800 put even with the dips. So you see this line, it's been very flat. You're not seeing 14 on 800 put getting unbound despite the down move, and the 14,700 put is actually strengthening. So strength in the 14,700 put and stability in the 14,800 put at this point of time shows you that market still, even though below with 14,800, is not expecting too much downside below 14,800. So yes, of course the puts will spike when there is a down move, when we see a big red candle, but at the same time we're not expecting this to go too much further. We have our stop loss is open, so we're not too concerned about a big 100-point slide either. So anyway, the slide seems to have halted slightly, but regardless, this opportunity is being used to sell puts. I mean, that's what is currently visible to me at least. And people are using this dip to sell the 14,700 put. We'll have to see if some kind of unwinding starts to pick up. 14,900 call is being heavily sold, and now 14,800 call is also picking up. Currently for the 14,800 call, there's about 38 points. Anyhow, so that being the case, we'll see if we hold below 14,800 for the next 20 minutes, and then we will consider rolling down maybe 1/3 or half our call position to 14,800 and setting a very tight stop loss on that. Right now, fear is on the put side, and so we have put side stop losses. We don't have anything on the call side. Okay, one more thing to cover is Reliance is now testing the day's low, and mainly the drag today is Reliance and Infosys. So these are the two stocks that are dragging, and Reliance we're expecting a support. I mean, if the slide continues, we're expecting something like 2040 to act as a support, and Infi we'll just have to take a look. Infi down 1.5%. Yeah, Infi is already at a support zone. It should act as a support zone. So here there should be supply. This 13,060 mark, this range. Big fall in Infi, but yeah, not expecting a big slide down from here. This should act as a support, and this should act as a support. So there is, you can say it is at a support zone, which is why our fear is not there on the put side. The data is very positive, and sentiment is also very positive. Yes, we gapped up and we got sold into. Lately we've been a sell on rise market more or less, so that trend is there, but not expecting big downside. Okay, so what we've done now is 1/3 of our calls, we have moved them down to 14,800 because we are holding properly below 14,800. The idea will be is if these puts expand to 36, 37, we will roll down our calls further, the remainder of them, to 14,800. And yeah, we don't want to do it right away because we don't want to take that kind of upside risk right away. Okay, now we're seeing the green candle, which could be a stop loss candle or be potentially an up move over 14,800. So right now we're pretty well balanced. All of our puts at 14,750, 1/3 of our calls at 14,800, and 2/3 at 14,850. If this starts expanding and we start heading above 14,800, then we square this off and move them back up, and then we're back to our initial position. These calls were moved down to protect the puts. Once the puts look like they no longer need any protection, we'll move the calls back up. So that's the idea. Lots of positions obviously now will be built up around 14,800, and for that straddle you're getting about how much? About 83 points. 83 points. is a good enough range. Yeah, okay. We're seeing that move to 14,800. We'll wait for 14,800 to be held for at least a few minutes. We'll wait for 14,800 to be held for 5 to 10 minutes. See where the strength is come. The entire market is moving at once. We have IT, Bank Nifty, Reliance not really participating, but IT and Bank Nifty sort of picking up from the lows, which is leading to the big green candle. Yeah, but too early to shift our calls back up. We're going to leave our calls exactly there, and we'll wait to hold at least 10 minutes above 14,800 to move them back up. Okay, 11 o'clock. So we're quite sideways, but the contributors, HDFC Bank are very strong, ICICI as well. TCS also quite all right. It's Infi and Reliance that's dragging. So that's a good sign. The fact that HDFC Bank, ICICI Bank are up means FIIs are buying. If is buying, we don't need to consider too much downside. So what is the market doing to work with that? So you see a lot of 14,800 puts were written in the morning, and now because of this dip, rather than excess unwinding of those puts, there is 14,800 call being written. So if you see this gray line, you can see it. I realize in the video it's not very visible. Perhaps doing this will make it more visible. Yeah, 14,800 calls being written, 14,800 call, getting about 38 points. The market itself is not expecting too much movement. Obviously, since we're sliding, puts have gone up in price, but they're not exactly pricing in a big down move. And neither are we expecting some kind of massive short covering rally, which is why people are easily selling the 14,800 call. So 14,800 right now seems to be the best case scenario. 34,500 on Bank Nifty. What we've been seeing though lately in expiries is last minute big moves, mainly led by IT. So we're going to be a little watchful of that. And as the day progresses, we're going to keep creeping in our stop losses and be ready to break out of our trade if required. So we've got a long while to go. For now, there is about 42 points in the 100 points, 42 points remaining. And yeah, we're currently sitting on little more than 12-13 points. So we'll keep you posted. So far, nothing really that is out of the ordinary. Okay, time is 12 o'clock and we've seen an up move which has deflated these puts, and we're once again at 14,800, which seems like the most convenient place for expiry on the current data. We saw this up move. We'll have to see if it once again gets sold into like the previous up move. And meanwhile, there is no intrinsic value to the strangle. We have 36 points and our hedges have about, let's say, 3.5 points. So we continue to hold this position. The setup looks very good for now. So in this up move where we're now holding above 14,800, we're looking at the pricing of the 14,850 call. The way this price changes will show you if there is some sort of urgency for short covering. So if people who have sold this call are in urgency to buy back this call, it wouldn't be trading at this price. We have come from below. After dipping, we have come back above 14,800, and this call has not even expanded in the past 30 points of up move, not even expanded something like 3-4 points. So that shows you that there's no urgency to buy this back while the puts continue to go down, which once again fits into the 14,800 expiry criteria. So we will try and see if there is some sort of big up move in this price, not from the spot movement, but assigning extra extrinsic value. You can tell here by the way the pricing changes. So if a 10-point up move here starts leading to this expanding to, let's say, 23, 24, and then despite holding there and not immediately making an up move, the price continues to go up, that shows you that, okay, suddenly there's big demand for those calls. People really want to buy back those calls or buy those calls. So options pricing gives a lot of sentiment away. And yeah, currently no intrinsic value at all, and about 35-36 points of extrinsic value in the strangle, and we continue to hold. Why are we not doing straddles? The reason we're not doing straddles is lately the last minute volatility is really catching us off guard. We don't want to do that. We want to be in a strangle position and that gives us the flexibility to shift in the last minute as we have in the week before this one and the one before that as well. Okay, time is 1 o'clock, and what we've done is move down 2/3 of our calls to 14,800 because we're seeing a slide, and slide is mainly coming from Bank Nifty. And we saw a little bit of dip in IT as well, trading at the day's low. But some kind of pullback now, but Bank Nifty continues to slide. Now almost 150 points below 34,500. So that being the case, these puts are really starting to expand. And if we test 14,750, then we will be moving all of our calls down to 14,800 and then potentially start moving away the puts as well. We have stop losses on the puts, which are at 37. And yeah, we're not going to wait till the stop loss hits, obviously. These are if there is a sudden rapid expansion on the puts. Meanwhile, looks like for now we are sliding down. So, and Bank Nifty continues to be the culprit. Okay, we are going to move down the rest of the calls. Okay, so we saw this big cascade led by Bank Nifty. What we did was we got out of our puts, so our stop losses hit. So our stop losses all got triggered at 36 and 38, and we got hit, and we re-entered by selling the 14,700 for 20, and now we have set a stop loss of 31, and the calls we will roll down the stop loss eventually. But basically the idea now is to protect the points we've already captured, and we're getting a good amount of points for 14,700, which seems to be like the bottom ceiling that we looked at in the morning. Okay, I couldn't really record that, but basically we exited our long puts. So see, our stop losses got hit. Stop losses got hit, exited the long puts, then slowly sold off our hedge at different points. So then we made our hedge as the point that we sold options. So we sold our hedge as the main trade now, and we purchased the 14,500 put as a hedge for that. So very interesting time. It's kind of difficult to protect the profit, but this is where stop loss markets orders really pay off. This is now expanded to 53. We exited at 38, more or less 38, 39. Those were the points. So now that huge spike, right, in OTM options, which is why we see this kind of a massive increase in the 14,600 put. And yeah, now this will be our trade. We'll close in our stop losses as well as we go, but we had to keep it a little flexible because at the end of the day, these OTM options can really, really fluctuate when there's a free sell-off. Very unfortunate that skipped recording that, but I thought I'd hit the record button. It had switched off. Anyway, there's about 21 points in this. Okay, so what's the plan now? Plan is that we have stop losses on both. The 200 point triangle is trading for 20 points. So we have stop losses on both at 22, 23. If we might increase the stop losses slightly to ensure that one tiny swing doesn't kick us out. And in the meantime, we will continue to see that these options have to lose value. So that is that. I think most of the time when you are in a strangle position, we kind of think of it like, okay, it works most of the time. But when it doesn't, and this is, I think, the second day in a row where we saw a big swing could take us out, it's about getting out in time. And if you are sensing momentum, or if you're seeing any other further trades, get into another trade. Otherwise, just get out and be done with it. Today, if it's a day with rapid volatility, why should today be the day that you try and capitalize on some trade? So especially if you're doing non-directional trading. Very, very interesting the way we broke down. Now there's no point in looking at the OI data or anything else. All we need to look at is the pricing of options. How is our risk reward looking? 200 point range, 20 points. That's pretty good risk reward. We have stop losses that will get us out more or less at cost. Even if those stop losses hit, we will be getting out at cost. So yeah, could have been a great opportunity also to just hold on to the hedge, but hindsight is 2020, and these OTM options, when they expand, they deflate in seconds. You won't be able to trade it. There won't be any traded price in between. And moves like this, a 10 rupee option might jump to 20 in a second and then head back. And the next traded price is again 10. So all kinds of that stuff happens. Now that we've seen some stability at 14,600, the market is cooling off and the IV is also cooling off. Okay, we're seeing some kind of volatility now, attempted pullback and whatnot. So considering rolling up some of the puts to 14,550, that'll be the idea. And we'll now set stop losses on this at 27, 28, something like that. We're moving in because there's more credit that can be taken. And 14,600 has acted as a very good support in this sell-off. So potentially we have the risk of our calls expanding, and to offset that slightly, the puts will balance as well. We'll have to be a little more flexible with how we set our stop losses, because otherwise it will just take a swing and get us out, and then we'll get reversed on. So it has to be a stop loss which will hit only if there is a justifiable enough move. Okay, this is fine. This is why we don't do a trade where we just set a stop loss and it's either hit or miss, because days like this do give you really good opportunity. So while there is something against discretionary trading, if you do it in a way that you're able to protect a move like this, then can reap great rewards. Okay, that should more or less take care of that. Now there is 27 points in the strangle. We have 27 points as the stop loss. We continue to hold for now. And the thing is, there's another hour and 10 minutes until averaging starts. So will be quite interesting to see where we are by the time we average. This is not looking like some big V-shaped recovery. Some stability around 14,600 currently. So what we thought 14,600 acting as some kind of a bottom did not work, and we continue to cascade. So we once again got stopped out on the put side, and we have sold now the 14,500 again and moved down our call to 14,650. Once again, same idea. We will set stop losses on all at 25, no, 26, 25, 26, 27, more or less. In that point of time, it's a 150 point strangle with 27 points left, and there's 55 minutes to go for averaging. So 55 minutes today can feel like a long time, but it isn't. And since I have stop losses in place and they will more or less execute at that price, not overly concerned. Idea will be to we start testing now 14,550, then we will move up, move down the calls. Yeah, it's going to be quite tense 54 minutes. We'll keep you posted. 35 minutes to go for averaging. I'm going to walk you over what happened. So once again, our stop losses on the 14,500 put got hit, and we started exiting that, and then we sold the 14,450 put. We also trailed the stop loss on our hedge which we had, and basically, okay, where did we buy back? Okay, our 14,500 put stop loss got hit. We then trailed the stop loss on the hedge, and we got out of that at some price, some decent price. And then we rolled down our call, and we also entered the 14,450 put. I will be sharing this trade log on the group, so that in case somebody is interested, they can take a look at it. Now what is happening is we are seeing once again an up move, which is expanding these calls. There's 35 minutes to go for averaging, and I'm not too sure how much adjustment we'll get to do. But the idea is we've set the stop loss. So this strangle is trading for 28.29. Stop loss is at 30. And most likely 14,500 now seems like a good expiry spot. 14,500 obviously was defended because of the massive amount of put open interest that's available. If we look at the OI now, there is still a good amount of put writing at 14,500, and unwinding hasn't happened. In fact, position has been added to. So this is what we're going with, that we will have a 14,500 expiry. At this point, this data also doesn't really matter too much. We're in the last 1 hour almost of the expiry. 100-point strangle has 28 points. So it's going to decay, and in case it starts moving, we have to correct for delta. That is going to be the plan. I don't know, no free lunch in the market. Definitely no lunch today. So another 33 minutes to go for averaging. Let's see how we get into this trade. We've done overall decent to manage to retain the points that we captured. More or less we have retained. There's another potential 27 minus 2, so 25 points that we can capture, and we're going to try to the extent that we can try, and see what we can take home. We are now manually exiting half our 14,550 calls and entering the 14,600 call. We don't want to move our puts up because we saw that story play out once already. So what is our position now? Okay, we're not going to be greedy. We'll just take what we get. We'll exit the rest of these also at market and take what we're getting for the 14,600. This will also completely change the stop loss logic. Let me just set stop loss of this for 23. If it hits, then we'll enter the 14,600 with this also. Okay, actually, you know what? Just too much headache. Okay, we'll have to cancel all these stop losses and set new stop losses. So maybe 3, we'll set at 13. We'll set this at 15, 16, 10 points basically. 10 points, stop loss of 10 points. It shouldn't have been that stressful a day, but it won't have been. But now this last minute up move is definitely stressing out slightly. Okay, so potentially another 10 points that we can get, and 23 minutes to go for averaging. Okay, 20 minutes to go for averaging. We're somewhat hugging 14,550, and there is currently in this 150 point strangle, there is how much? 8 points. So 8 points, and we had a little extra margin the last 20 minutes. We have added to our position by a little bit, and the idea will be to capture these 8 points. We have obviously our stop losses set, so we need to move down the stop loss on the call as well. We will slowly, and that's the plan for now. Okay, 1 minute to go for averaging. We had again moved up our puts to compensate for the bleeding calls, and we are setting a stop loss on the put side. Averaging should start in a second, so we'll also set exit criteria here, and we'll keep reducing the stop losses. That's going to be the plan for now. Keep pulling down the stop losses as the decay picks up. Okay, something like 10 points left to go. 10 points left to go. We're at also the best mark to market we've been all day, and now that the averaging sets in, we need to see if there'll be some kind of big moves, and meanwhile we can start reducing the stop losses, the tedious work of reducing stop losses on everything. Okay, there is 6 minutes into averaging. Everything is crashing, both the put and the call. So looks like most likely we will be capturing another 3 points. We will move down our stop losses further, so that the average should almost certainly be between 14,500 and 14,550. And yeah, it was very tricky day, and yeah, I managed to do all right though, and I hope your trading day was okay, and if you're on the wrong side, you got out quickly. Okay, so an update. Basically what happened is our stop loss got triggered on the call side because we're seeing some big up move in the last moment. So we got out at 5 or so, and we also had a hedge which still had some value, so we exit the hedge at 30 to 35 pies. Finally, for the day, we managed to do all right considering it was one of the more frustrating days. We closed positive 8 lakhs. I think charges alone for today will be something like 30,000 for sure. That's the kind of churn we had, but still close to 8% return, slightly less than 8%. I think the margin used today was something like 1.15, but good enough expiry. Was not an easy expiry to trade. I hope your trades went all right, and that if you're on the wrong side, you got out in time. Okay, one more thing to add in the last minute is try and buy the dip. Dips like this are good to be bought. So, I mean, in whatever little thing, keep adding. Whenever you see bad days, like really bad days, you see like a 1% fall or more, add if the intention is to accumulate over a long period of time. Yeah, interesting day to say the least. I hope you have a great evening. I will be trading tomorrow as well, so I will catch you then. Have a great evening. Bye bye.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab. So do not forget to check that from time to time.